Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. My name is Chris Coney, I'm the host of the Cryptoverse. Now today we're going to go for a pricing edition of the Cryptoverse where we do the forgotten market overview. You know, when I shortened the episodes down, the market overview kind of went by the wayside because I felt I was repeating myself quite a lot. And the Bitcoin price wasn't doing much, so that was another reason to do that. So here's the chart right here. I was banging on about this section here. Let me get my crosshair. I was banging on about this section. I got my Fibonacci retracement lines, and I was saying that we were bound between $550 range at the bottom and a $600 at the top. And then it was the 3rd and the 4th of September when we broke that point of resistance. And believe it or not, just as it broke that, I took that as a signal and I bought some more Bitcoin at that point, right when it just broke 600 and it started to look like it was going to provide support. I invested at that point. I don't just put the lines on there for fun. I do listen to them, but I don't trade in and out. And I just look for times to get in when the time is right. Okay. Anyway, so moving on to the article for today. It's courtesy of CoinDesk because they've written an article here called The Two Big Factors That Are Driving Up the Bitcoin Price. And this is an article by Charles Bovaird. It was published yesterday, the 9th of September on coindesk.com. So let's see, what are these two factors that are driving the price up? It says the price of Bitcoin rose close to 10% this week, pushing higher as bullish market sentiment and low liquidity created an ideal environment for gains. That's interesting, isn't it? Low liquidity means very few orders on the books for trading exchanges. Now, the digital currency enjoys notable increases this week, surpassing $600 on Sunday the 4th of September, while largely avoiding any significant pullbacks or corrections. Because you know, you have a phase 1 and a phase 2 in trading cyclicity. So what goes up must come down and what goes down must come up, especially in currencies that can fluctuate. They can keep going up and up and up, and they can keep going down, 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 down. So up and down are, relative. And usually if a price goes too far down and it's undervalued, then it gets bought. And when it goes too high, it's overbought and then it gets sold. So it's the philosophy that markets tend towards equilibrium. I personally don't know if it's whether markets tend towards equilibrium or whether we find a price that we get consensus where the masses agree on what the price is. And if enough people disagree, they'll either push the price up or push the price down to reach that point where the vast majority of people agree on the price, right? And then there are external factors like news, developments and so on that change people's perceptions, and that then changes their trading behavior. It changes the value they perceive and therefore changes whether they will pay more or less for a particular thing. So, quick bit of economic philosophy there. Now, it says here that the sentiment is so strong that, quote, players are not willing to bet against the rise of Bitcoin against the US dollar, close quote. And that is according to Peter Zukowski, who is the director of operations for Whale Club. And he told CoinDesk this, quote, new short position openings are almost at an all-time low, which indicates that the market expects a continued rise. Close quote. Now, Tim Enking, chairman of cryptocurrency investment manager EAM, sees similar forces propelling the current market. And he added by saying, sentiment is generally bullish. And there's a new heading. It says, fast start bullish sentiment. Bitcoin prices had a fast start during the week, opening at $571. That was on the 2nd of September, before surging 4.9% to a price of $599, and that was the following day. According to the CoinDesk US dollar Bitcoin price index data, that was. Now, while the digital currency tested $600 and failed to break through that resistance, it did surpass that key psychological barrier on Sunday the 4th of September before rising to an intraday high of $612. And that again is according to the BPI figures. Now, the digital currency's price surged more than 6% over the weekend of the 3rd and 4th of September. And market sentiment was strongly bullish during these 2 days. And that's according to the data provided by leveraged Bitcoin trading platform Whale Club. They said long exposure, which is as measured by the size of open positions, was 88% on Saturday and 87% on Sunday. So, wow, the vast majority of orders on the books, actually that's open positions, so that's actually trades active on the market. The vast majority of them, 87 to 88% of them, were long positions, meaning buying, expecting the price to go up. Now, confidence, which measures the percentage by which a particular day's position sizes were larger than average, registered 86% on the 3rd of September and 87% on the 4th of September, according to additional figures from Whale Club. Additional figures from the data reveal that during the period, the value of long bets significantly exceeded the value of short wagers as measured by Bitcoin and Litecoin margin funding. So for those of you that don't know, margin funding is where you borrow currency to make a bigger bet. And you can do that in either direction. So if I borrow a ton of Bitcoin to buy US dollars, or I borrow a ton of US dollars to buy Bitcoin, it means that if the price goes up, I make a lot more, right? Because I'm not just betting with my own money, I'm betting with money that I've also borrowed, so that enhances my gains, but it also enhances my losses. Because if that value of that goes down, I still owe whoever I borrowed it from the US dollars, the $1,000 whatever I borrowed. So that's margin funding. It's a way of increasing the gains for a trade. And usually people do margin trading in the expectation they're going to make money, which is why they use leverage. And the downside is that, it enhances your losses, but you don't trade to lose, you trade to win. So now, priming the pump. Bitcoin enjoyed these sharp gains and the bullish sentiment after the cryptocurrency ranged sideways for several weeks following the hack of the exchange Bitfinex, Zukowski told CoinDesk. Now, during this time, trading volume was limited as many market participants took a pause in the aftermath of the Bitfinex hack. And Bitcoin transactions totaled 7.82 million in the 7 days through to the 8th of September, Bitcoinity data revealed. So that's data from Bitcoinity. This period of range-bound trading, quote, lasted for several weeks, during which the market was powering up behind the scenes, and traders were opening positions, betting almost equivalently on a rise in Bitcoin versus a price decline, again often on margin, he said. So these substantial speculative bets, coupled with low trading volume, left the market highly susceptible to short and long squeezes. In this environment, a purchase of less than 600 Bitcoins, executed by one or more market participants, was all that was needed to trigger a short squeeze, Zukowski stated. Wow. So that's when the buyers significantly outnumber the sellers, or vice versa. If there's not enough orders on the books, one side or the other, it's a big opportunity for the price to move quite significantly. Now, Jacob Ederzoff, a cryptocurrency investment fund manager, emphasized that the sharp rally that took place over the weekend required both a notable purchase and a short squeeze, which forced speculators to close out short positions. Yes, because of course, if the price is going up and you've shorted Bitcoin, you start losing money. So you take your trades off the table, which effectively releases the downward pressure on the price. So it's a compounding effect. Quote, this weekend's rise was much too sharp to represent just gradual recovery, he told CoinDesk. And then he said, a short squeeze can turn a small rise into a big jump, but it can't turn a flat line into a jump. Close quote. Yeah, so that's like thinking of a metaphor here. If you had your handbrake on and your foot on the brake, but you're also revving the engine and then the car was trying to move forwards, when people close their short positions when the price is going up, that's like, first of all, releasing the handbrake, so the amount of resistance to the car moving forward decreases, and therefore the car starts to move forward more aggressively. And then if you took your foot off the brake as well, that even further releases the resistance, and all of the force behind the acceleration is allowed to unravel. So that's a rough metaphor of how that works. Now, after Bitcoin's sharp gains over the weekend, the digital currency traded between $600 and $615, and that was on the 5th, 6th, and 7th of September. Again, that's BPI figures. During this 3-day period, the market was 86.3% long on average. Confidence was also high, averaging 84.3% over the 3 days. Now let's talk about Bitcoin breakout. The digital currency broke out of this malaise on Thursday, the 8th of September, when it surged more than 2% to a weekly high of $628. Once again, a short squeeze was the likely culprit, stated Sikorsky, emphasizing the price movement took place during a time of low trading volume and did not coincide with any notable news catalysts. In the near term, the market could experience further short squeezes, as Sikorsky told CoinDesk on the 9th of September that, quote, the current market is quite illiquid, close quote. Existing short positions are being cleared out as price continues to rise. Shorters are closing their positions at a loss and reopening longs or simply staying out of the market for a while, he said. Because the market is so illiquid, the situation, quote, places price at the mercy of players with larger firepower, close quote. And finally, he added, they could change the market's direction on a whim. And that's the end of the article. So yeah, that's another thing. Going back to my car analogy, where we have the handbrake on, the foot brake on, lots of revs, the car's trying to move forward. When he's talking about if the car does start to move forward, if the price does start to go up, people who have shorted Bitcoin start losing money. So there's one aspect where they close those short positions, releasing the pressure, i.e. releasing the brake on the price movement up. But what will further compound the price increase is if those same people then change their bet the other way and start buying Bitcoin and getting behind the upward move. So not only does it not slow Bitcoin down, takes the brakes off, it also adds extra acceleration if those people decide to re-enter the market with a long position. So what does a lack of liquidity mean? It means that traders don't really know which way it's going to go. That would be my analysis. Because if they did, they'd put orders on the books. They'd open positions and they'd have confidence in making money whichever way it was going to go. So maybe traders weren't expecting the price to go up. Maybe that's why the lack of liquidity. Yeah, it's very interesting, isn't it? I mean, most people in general that have a long-term investment view of Bitcoin, they create a lack of liquidity because they just buy it and hold it. Like the money I have in my Bitcoin savings account, for example, that's not very liquid. That's not exactly true because I put it in Magna and they actually lend that Bitcoin out. So it's not just sat there doing nothing. It's being circulated into the economy somewhat. Okay, so that was a good article, wasn't it? Nice update on the Bitcoin price. That is going to do it for today's edition of the Cryptoverse. Thank you very much for listening today. I'd very much appreciate it if you'd go to and subscribe to the podcast first and foremost. But I'd also appreciate it if you would support the Cryptoverse. And you can do that in a number of ways. Firstly, you can go to the podcast page and send us a Bitcoin tip. That's number one. Number two is you can check out our merchandise store by clicking on the store button on the main Cryptoversity menu. Or you can buy a structured course that will teach you more formal philosophies and techniques around Bitcoin. So any of those things, the store is brand new. If you want to get yourself a t-shirt or a iPhone case or something like that that has the Cryptoversity branding on it, then that'll help us out a lot. All right, that's going to do it for today's episode. So until tomorrow, it's me, Chris Coney, saying bye for now.